Good morning. Welcome to Trading Hour. I'm Reema Tendulkar with Mia Sonia Shenoy and Pavitra Parekh. Well, it's hard to call this post-Christmas Santa rally, right? It just feels like it's a rebound after the excessive sell-off, the brutal sell-off that we had last week. And this has been a trend across the other global markets as well. So there is a risk-on that you are seeing across the markets which are trading. And remember, most of them are shut today. But you have some green going for Shanghai, Nikkei, the Korean markets, the Kospi. But many markets like US, South Korea, Hong Kong, Singapore, Malaysia are shut on account of Christmas, while markets in Australia, New Zealand, UK are shut for Boxing Day. So expect the activity to be quite thin today. It's a holiday shortened week, but this morning there is a rebound. The Nifty and the Sensex currently up close to about 0.8%, but it's the broader markets which have rebounded the hardest, right? The harder they fell last week, the harder the rebound today. The mid-cap index is up over 2%. The small-cap index is a gain of close to about 3%. The advanced decline ratio has been steady since morning. It's currently at 7 stocks in the green for 1 in the red. And talking about the big winners, it's the commodity names. So Nifty, Tata Steel, Hindalco, these stocks are higher in trade. IndusInd Bank, Tata Motors, ITC as well. Add that to the gainers list. Good morning again. Hi.
Good morning. I actually can't really take this recovery very seriously, right? Considering that, I mean, of course, it's the last week of 2022. And most, as they say, the cat are away, the mice are at play. So most global markets are closed. You don't have any cues coming in from there. The only thing is that the Nifty has held on to the 200-day moving average. So it's sliced all other levels, 20, 50, 100-day moving average. And 200-day moving average for now is holding. So let's see if that holds. I think the big trigger would be as we head into the earnings season, which starts in the first week of January. So ahead of that is just sort of quiet times, marking time till the end of the year.
Looks like that, and it looks like we're really taking whatever little we can get, right, and hoping that we can cheer that. In terms of the sectors that are doing well, it is really the PSU banks which are doing well today. So the banking pack in general is also doing quite well if you take a look at that. So some of the smaller banks will come up for you. Take a look at the move on, say, Karnataka Bank, South Indian, Yes Bank. These are some of the stocks which are really standing out. In addition to the metals, you also have some of the big auto names which are doing well today. So something like a Tata Motors is holding up quite well. You have Eicher, M&M, a few of those stocks on your screen. On the downside, not too many today, but there are some from the pharma pack that you should keep on your radar. So that's what's really going on as far as the market setup goes. But let's, with that, invite our first management on the show as well. Axiscades Technology is on our radar today. It recently completed the acquisition of Mistral Solutions for nearly 300 crore rupees, and it sees significant upside to its earnings through synergies. To discuss this, along with the outlook for the second half of FY23, we're joined by Arun Krishnamurthy, who's Managing Director and CEO of Axiscades Technologies. Mr. Krishnamurthy, thank you very much for joining us. This is Pavitra. Season's greetings to you first off to start off with. And, just if you can explain the synergies a little bit more to us. We do know that this acquisition has been completed, but if you can take us through the benefit that will really come through for your company.
Sure. Thank you for having me on the show, firstly, and Merry Christmas to all of you. I've taken a few days off and I'm in Goa, so I can really feel the spirit of Christmas out here. But yeah, so this acquisition for us is going to be very value accretive in the sense that Mistral really has 2 parts of its business. The first business is in the semiconductor space, where they're into product engineering services. And the second one is the defense business that they do, the Indian defense. So the reason for the acquisition is, one is that, Axiscades as a company is into automotive, aerospace, heavy engineering, and energy. Excuse me. And the reason that we acquired Mistral is that, one, the semiconductor business is very vibrant. As you know, there's silicon and there's semiconductor in every device now. So we see that to be a very vibrant business going forward. And also, this is something that we can take to our existing verticals in aerospace, automotive, and energy. And the second part is defense. As you know, there's the whole Make in India, the Bharat Atmanirbhar initiative. The Prime Minister, the Defense Minister are pushing, for a lot of indigenous defense development. And if you really look at defense, there's just 3 or 4 vendors. There's Mistral and there's a few others. So we are really well positioned from that perspective, and we want to capitalize on this. So we feel that the benefit for us is, one is on the semiconductor side, and the second is the defense business that, we know will be on a good growth path going forward.
Could you give us a sense of what the revenue and margin accretion will be? I think your annual revenues are roughly about $100 million if I just annualize the Q2 run rate. What could the number look like once you fully integrated Mistral? How much higher? And what about margins? The Q2 margins were close to 20%, which is higher than what you had previously. What would be the target margins post the acquisition?
Yeah, so I think firstly that, this acquisition has been done in stages. So we've been working on this for the past 2 years. So we have actually been consolidating the Mistral numbers. So the 100 million that you talk about is actually including Mistral. So that's point number one on revenue. As far as margins is concerned, Mistral has very healthy margins. So they have upwards of 20% EBITDA. And like you said, Q2 for us was 20%, but I would say the normalized margin for Q2 was 15%. The reason being that there were some one-offs on the defense business. There was a high component of services. So the margins and the EBITDA that Mistral brings in will be very value accretive, but the revenues is already consolidated.
Okay, Mr. Krishnamurthy, good morning. This is Sonia and Merry Christmas to you. I'm really envious that you're sitting in Goa, at right place at the right time. I thought you'd be in some Goa attire as well, to kind of get the Christmas cheer going. But be that as it may, Europe was really in a tough space in the quarter gone by. In fact, in your own business, Europe was down almost about 5.5% to 6%. Has there been any recovery there? And what's the outlook for the new year in terms of different geographies?
Yeah, so if you look at the verticals that we service, so if you look at aerospace, as you know, we work with Airbus, and we recently announced a deal renewal with them, which is actually significantly larger than what we've been doing with them in the past. So, we have a very good pipeline as far as Airbus is concerned. So our aerospace vertical will continue to be vibrant. As far as automotive is concerned, the kind of projects we work in are very early cycle R&D projects. So these are typically not, something which is impacted by macroeconomic trends. So we don't see much of an impact on that. Energy, again, is a topical issue. With Ukraine, energy prices went up, they've gone down again. But we're seeing a lot of investment in energy. I would say heavy engineering is probably one area where there might be a bit of a muted environment. But having said that, I don't want to gaze into the crystal ball. There are obviously macroeconomic trends. There is inflation. There's the COVID issue in China. So we'll have to watch the space to see how it goes, not just in Europe, but globally.
All right, got that. Mr. Krishnamurthy, another thing, for Mistral, you were talking about the defense part, which you seem very optimistic about. Can you tell us what part is defense for Mistral? That's one. And also on Airbus, since you mentioned that order, what is the size of this order?
Yeah, so as far as Mistral is concerned, we work on the communication protocols for defense. So if you look at all the radar technology, the receivers and the transmitters, all the radar components that go into fighter aircraft, submarines, etc. So that's the part that we work on. And, it's the communication technology and electronic warfare, which really is on the growth path. We've seen that with the Ukraine crisis, with drones, etc. So we are sort of in the embedded space on the communication part as far as defense is concerned. As far as Airbus is concerned, the deal that we have, and unfortunately, I can't give you the deal size because that's client confidential, but I can tell you that it's bigger than what we used to have in the past. So we work on the fuselage and the wings part of Airbus, and this is across the locations of UK, France, Germany, the US. So it's quite a big deal, and it's aerostructures and quite high-end engineering. But it'll be much better for us. But unfortunately, I can't give you specifics on numbers.
Okay, but it's bigger than the deals that you won with Airbus in the past. Mr. Krishnamurthy, the last time we chatted with you, you indicated that you've appointed Edelweiss and you are looking to raise 100 crores via a preferential issue. Could you give us an update on that?
Yeah, so that process is ongoing. So we are talking to investors, we're talking to various stakeholders. So you're right, we're looking at raising anywhere between 100 crore to 200 crore. And this is really for two reasons. One is to write off the debt, and the second is for growth capital. Because we really feel we are in a very vibrant space with engineering services, especially with the China Plus One strategy. I think India is really well placed. So we have growth capital to hire some people to set up labs, etc. So we are sort of in conversations, and hopefully in the near future we might be able to conclude it. Yeah.
Will it get concluded in Q1 calendar year 23? Will it extend itself to Q2? Just some indication of timeline. And have you increased the size of the fundraise? Because last time you indicated it will be around 100 crores. Now you seem to be suggesting it could go upwards to 200 crores. So have you increased the size?
No, it's the range that I talked about. So 100 crores. Yeah, we hope to conclude quickly. I mean, I can't say for sure if it will get concluded in Q1. There's the holiday season. Obviously, that has slowed things down a bit.
So you said that this fundraise is going to be in order to write off your debt. What does this do to your debt? I mean, how will you be completely writing it off, or will there be some remaining debt as well? What will the amount be?
Yeah, so we have 200 crores of debt because primarily for the Mistral acquisition. So one is, of course, we're looking at refinancing it, looking at better terms. But part of this growth capital will go towards the debt. But part of it, like I said, is towards hiring new people and setting up labs, etc.
Okay. I just had one follow-up. You were talking about demand trends and these verticals that you're in, whether it's aerospace, defense, automotive, heavy engineering, now they're starting to pick up in a big way. What are you understanding from your clients about spends? Do you think spends will go up in the year to come? And what would that do? What is the visibility that you would have in orders, say, over the next couple of years?
Yeah, so, all these verticals are quite vibrant. Aerospace has come back very strongly after COVID. So clearly over the next 4-5 years, the spend will go up. Companies like Airbus are looking at increasing the manufacture of planes from 45 to 75 in a month, which means there's a lot of engineering work. Automotive, there is obviously a lot of move towards connected vehicles, electrification, etc. So that's a very vibrant vertical. Energy, again, we are seeing that, there's obviously a push towards clean, but then fossil fuels will still remain. So we do see some investment there. So we see in the near term investment to be strong in all these areas. And there is a lot of technology. And of course, semiconductor, I should mention from Mistral, that is actually on an absolute growth path. And there's been some shortages of semiconductor, but hopefully we are at the tail end of it. And next year we'll see increased supply. But that will be a very vibrant vertical as well for us.
All right, Mr. Krishnamurthy, we are going to leave it at that today. Thank you very much for joining us and taking us through this acquisition as well as your outlook going ahead. That is the management of Axiscades Technology talking about the deal synergies that they see with Mistral and also the outlook going forward. They've not disclosed the size of the Airbus deal, but they are saying it is larger than the previous orders that they have won. With that, we're going to get into our first short break on the show. But on the other side, we're going to shift focus and talk about the world of commodities. We'll tell you what's going on. Welcome back. You're still tuned into Trading Hour on CNBC-TV18. And as promised, let's talk about the commodity space now. Manisha joins us. And today, she's going to recap all that went down in 2022 across commodities. Manisha.
Pavitra, thank you so much for that. I'll start with the energy space where we are looking at Russia reiterating that they're going to cut production by 5 to 7% in the first quarter of 2023. And that is the reason we are still trading above $80 a barrel. This year has seen a high of 139 and 132 for both the varieties respectively. From those kind of highs, we're down by nearly 38 to 45%, but still positive in the year. So 5 to 11% of gains being put there. The gas prices were quite divergent. US was up because of the higher exports from US that we saw, but the European gas prices saw some profit taking after European Union put out a number saying that 83% of capacity is still filled with natural gas, and that led to some declines there. This is what the energy products have been doing. Gasoline, heating oil plus quite strongly there. Coal clearly has been an outperformer in the energy sector with 138% of gains. Underinvestment and strong demand for fossils as the electricity prices were on the higher side clearly has led to that being a gainer. And the markets do believe that the first half of 2023 as well could be quite strong for coal going forward there. Moving on, that's of course the energy sector, but take a look at the precious metal prices. And while gold prices have been flat to slightly negative in the dollar terms, in the Indian rupees we have seen, 12% of gains coming in for this year. Good performance continuing in case of silver, 3% up in the international markets, 15% up in the Indian markets. But the outperformance clearly comes in from platinum after declining nearly 23% in the previous year. 5% up in 2022 is how we are trading. Take a look at the industrial metals then, and we've seen copper and aluminum prices hit all-time highs in this year. So from those kind of highs, we're down between 35 to 45%. If for the year, down 15 to 16% for both of these commodities. The declines have just about continued, even more in case of tin, where we saw higher supplies but weaker demand, and that continued to weigh down to the markets. And zinc is down 15%, even as you are looking at all-time low inventories on Shanghai and LME. The reason being that the demand is weak, clearly playing on the prices there. Take a look at the nickel prices then, and that clearly was the headline this year. We saw $100,000 per ton of all-time highs here. The prices were then corrected to $48,000, and we're looking at 45% of gains in this year until now in case of nickel. The ferrous metals like steel and iron ore are closing the year in negative, anywhere between 15 to 6% on the weaker side. Last year, cobalt was up by 80%. This year has gone in for some profit taking. The metal of the year clearly is lithium, 109% of gains into this one, as strong demand from battery and renewables clearly keeps that market metal in focus.
All right. Thanks a lot, Manisha, for that, giving us a quick rewind on how the year shaped up for the commodity space. For the market itself, as of now, it's picking up some more pace. So the Nifty is at the highest point of trade, up almost 150 points. And the Bank Nifty is charging ahead, 450 points higher now. Let's slip into a quick break. When we come back, Gaurav Ratnaparki of Sharekhan will be with us. He'll give us some top trading bets for the trading hour. Well, for now, it's looking like a pretty good screen, actually. If you look at the momentum movers on the upside, you have a lot of these names from the banking space, whether it's South Indian Bank, Union, IOB, J&K Bank, that are all up 8 to 10%. But just be a bit cautious because a lot of the losers or laggards are also climbing. So maybe it's just a pop. Something like a Yes Bank, Zomato, etc. are also doing quite well. So just be a little cautious on the upside. But the IT sector is one of the biggest underperformers this year. Will we see a better 2023? Rima, what are the reports suggesting?
Well, for starters, Nifty IT has been the worst performing sectoral index this year. It's down more than 25%. But bear in mind that this comes on the back of two very strong years. In 2020 and in 2021, the Nifty IT index had a gain of more than 50%. So here what we're presenting is the bull versus bear argument on IT stocks heading into 2023. We're going to tell you 4 reasons what could work against the IT names and 4 reasons what could work in their favor, and then you can decide which side of the fence you are on. So first, on the bear side, right? This is the bear case. What could be the things that go wrong? One, tech budgets. Remember, this has been, feared. Tech budgets are typically announced in January, sometimes in early February. Tech budgets may decline. 2, there is a risk that tech budgets this time may be short-term. It may not be for the full year annual budgets. You may say, you may have companies saying that perhaps this time we're going to outline a tech budget only for 3 months, 6 months, because there is too much uncertainty. And there is also a risk that even if a company says that I'm going to be spending 5% on my tech budgets this year, the actual spend could be a lot lower because as the year progresses, their financial condition is deteriorated and they do not have that 5%. So there could be a divergence between what the companies allocate as tech spend and what the actual spend could be. Number 2, a sharper than expected, a sharper than feared downturn in the United States. There is a very strong correlation between the US GDP growth and the IT services growth. So this is the Credit Suisse analysis where they're saying that current consensus is that US GDP growth will be 0.6%. In that case, IT companies, the top tier IT companies, will see about a 7.5% growth in FY24. However, if we get into a deeper recession, look at the way the top line growth will come down. In the bear case, if US GDP growth contracts by 1%, we're looking at a revenue growth falling from 7.5% to 5.7%, and that could drive further EPS cuts. Remember, up until now, the decline in IT names was more on account of PED rating and not so much as EPS cuts. Point number 3, premium valuations. Despite the valuation derating, Indian IT companies still trade at valuation premiums compared to the pre-COVID average. And the last point is mid-cap IT. Mid-cap IT could be far more vulnerable on account of a couple of reasons. One, client concentration. They have a lot of dependence on a few large clients, and if there is weakness in any of these clients, their revenues get disproportionately affected. Secondly is vendor consolidation, which basically means that earlier a client would say, I'm going to give all these 5 companies, small deals, right? They're going to have 5 small deals. Instead, they will say, I don't want that hassle. I just want one large company who will do all my deals together. That tends to hurt the mid-cap IT companies. And third, mid-cap IT companies have a lot of dependence on short-term deals. But those short-term deals have been impacted due to uncertainty. But now let's get to the bear case. For one, IT stocks have been consistent wealth creators. Look at the 3-year, look at the 5-year, look at the 10-year CAGR return of the IT companies, and you would see that they've been giving you a growth rate of close to about 20-odd%. Right through all the cycles, Indian IT companies have performed. Names like TCS, Infosys are not created in the day. They've got decades of work experience. They've proven themselves in digital transformation. They have adapted themselves to the new reality, and these are companies which benefited as the digital transformation went underway. Also, IT companies have gone through one year of time correction and significant valuation correction. So a bulk of it perhaps may be behind us. And finally, the 4th reason is cloud adoption and migration is a multi-year tailwind. Even if things slow down, it cannot be reversed. So this is a cycle which is expected to last over a couple of years. So it can pause, but it cannot be reversed. So those are just a couple of reasons that I wanted to put on forth on the bull versus bear case for Indian IT as we step into 2023. All right, let's get chatting about the technicals then.
Let's do that, Reema. Very interesting, and it really throws up both sides of the debate, right? Well, we have been speaking to our guests about as well. So thanks for highlighting the bear and bull case for Nifty IT. But with that, let's take a look at the markets, which are currently at the high point of the day. It's over 0.9% higher for the Nifty right now, 165 points. So we are at the high point of the day, and it is really the mid-cap and small-cap space where we are seeing a lot of momentum. So the mid-cap index is up 2.5%. You have the small caps, which are seeing a gain of over 3% as well. So let's get you a technical check on this market. Gaurav Ratnaparthi of Sharekhan joins us now for exactly that. Gaurav, good morning. Thank you for joining us. The morning has definitely been good. Of course, we're just recovering a bunch of the losses that we saw last week. But how do you look at it right now? Would you take a position at the index level?
Yeah, so good morning, everybody. So basically, after the sharp decline in the last week, the short-term momentum indicators had reached the oversold zone. And as a result, we are witnessing this pullback today. But looking at the overall structure, my sense is that this is only a bounce back, and it is unlikely to turn out to be a larger rally. On the higher side, Nifty can test its crucial early moving averages, which are near 18,050, 18,100. However, at that level, at around 18,100, Nifty can attract selling pressure yet again. And from there, Nifty can move back to test the level of 17,800. So all in all, this is only a pullback and unlikely to be a start of a fresh up move. Even if you look at Bank Nifty, it had broken a crucial rising trend line on Friday, and today it has moved up to retest that trend line. So 42,200 is a crucial resistance for Bank Nifty where it can attract selling pressure. So basically in this week, volatility is likely to remain high, and that can be coupled with low volumes. So one needs to be very stock specific and should have proper position sizing in order to sail through this volatility.
Okay, so this is just a pullback. Don't get fooled by the kind of rally that you're seeing right now. Thanks, Gaurav, for that. Individual stocks, I wanted your thoughts also on names, from the defense space, from the PSU banking space that have resumed the uptrend. Anything that you like here for some follow-on buying?
Yeah, surely. So from the defense space, HAL and BEL, these will be the two top picks. Both these stocks have seen a considerable correction, and after that, they are going for a fresh move on the upside. So over here in these counters, this can be a start of a fresh up move. The medium-term trend remains pretty solid, and despite of the short-term correction, the medium-term trend remains unchanged. And in fact, both these stocks are about to start their fresh up move. So one can buy at current level, keeping stop loss below today's low, and expect to retest the recent highs. So both HL, BEL will be buys at current level. And from the PSU banking space, SBI will be the stock which one can consider. The stock has been underperforming the overall PSU banking space, but nevertheless, the downside looks pretty limited. The stock has seen a correction and has taken support near its 20-week moving average, and from there it is moving up. So 570 is a pretty strong support from where it has started recovering today. So keep a stop loss below 570 and expect the stock to head towards the zone of 630 or 632, where there is a daily upper Bollinger Band as well as weekly upper Bollinger Band.
Any other stock recommendation, trading ideas for the last trading week of this year, Gaurav?
Yeah, sure. So I have picked up Trent. Trent has seen a correction which started pretty earlier than Nifty. Nifty continued to move higher till December, but Trent entered correction mode in November month itself. So it has seen a pretty deeper correction as compared to Nifty, and has seen a three-wave correction which unfolded in a channelized manner. And the stock in Friday's session has taken support near the lower channel line as well as near 200-day moving average. And from there, it has started moving up. So at least a bounce towards the upper end of the channel is what we can expect. Still, it will be a decent upside from current level. Target will be around 1420, 1430, which is around the upper channel line. And one can keep a stop loss at 1310. And the second pick is Ultratech Cement. So over here, again, the medium-term trend is pretty strong, and the short-term correction is actually an opportunity to align with the larger uptrend. So the correction has taken support near the junction of 40-day exponential moving average and daily lower Bollinger Band. And these two parameters combined together generally act as a very strong support, and high probability level can be considered from where the stock starts its larger uptrend. So same is the case with Ultratech currently. Keep a stop loss at around 69.50 and expect a target of around 73.60, 7400.
Okay, thanks a lot for that. Any disclosures that you want to make?
Yeah, so we may have recommended these stocks to our client.
All right. Well, thanks a lot for joining in. Well, there's some news coming in on your screen. Sources saying that CBI has arrested former Videocon group promoter Venugopal Dhoot. Now, remember, this is in association with the Chanda Kochar, Deepak Kochar case, where Venugopal Dhoot had helped Deepak Kochar get 95% share of NRL. So, the opening of this case has now resulted in CBI arresting the Videocon group promoter Venugopal Dhoot as well. More details coming up in a bit, but for now, let's slip into a short break. On the other side, a whole host of stocks will be in focus on the back of fresh brokerage calls that have come through this morning. Stay tuned.
Holding on to all their gains, we're currently up close to about 0.8, 0.9%. So now it's picked up some more pace. We were up close to about 150 points, now up nearly 173 points. Talking about some more movers, Poonawalla Finance, FinCorp, that's higher by close to about 12% in trade. Today, Motilal Oswal has come out with a report where they've initiated coverage. They've put a target price at 350, and they say the scalability of Poonawalla FinCorp will be aided by direct, digital and the partnership model, which is followed by the company. Poonawalla FinCorp has partnered with various fintechs and consumer techs. Upgrade in ratings and significant improvement in liability franchise will also help drive. So they're penciling in an AUM growth of 37% from FY22 to FY25 and a PAT growth of 65% from FY22 to FY25. So that is the big gainer. But talking about other brokerages, let's talk about NMDC, Canfin Homes and Petronet LNG. This is a brokerage corner. My colleagues are with us. So let's straight away get to them. Good morning. So first, Vivek, to you, NMDC, what is it that Motilal Oswal has to say?
Well, that's right. So, very interesting note coming in from Motilal Oswal this morning on NMDC. They actually have quite a positive view as far as, steel and iron ore prices are concerned. First, what is it that they've done? They've retained their buy stance. They've raised the target price, to 138 from the 134 that they had earlier. And what they're saying is that the main reason for their increased or improved outlook as far as iron ore price and steel price are concerned is that there is now going to be focus on finishing real estate projects in China as, the economy opens up. So what is it that they're doing? They've increased their FY23 and FY24 EBITDA estimates by 3 to 4%. This is mainly to factor in higher average selling prices. Also, apart from that, they're seeing much higher volumes both from Karnataka as well as Chhattisgarh this time around. And the other important trigger that they believe can aid to a valuation re-rating is the fact that there is now no more steel capex as far as the steel plant is concerned. So they believe the dividend yield will be much higher. They believe the valuation remains quite attractive and fundamentals are supportive at this point of time.
Okay, thanks for that, Vivek. Well, Motilal Oswal has written a note on Canfin Homes. Abhishek is here to tell us more about that. Abhishek, over to you.
Well, Sonia, as you mentioned, Motilal has written on Canfin Homes. They maintain their buy call with a target price of 630 per share. They say that the re-rating will be there on Canfin Homes until and unless they find a successor. Their ability to identify a successor is there. The biggest moat in Canfin Home is the business model with superior liability franchise. We are seeing that with the credit rating of Canfin Home being AAA. So there could be a near-term transitory compression in the margins. So they expect net interest margin to be about 3.3% to 3.4% in the medium term. They estimate credit cost of just 15 to 20 basis points over FY23 to 25, which has been the case with historical credit cost of Canfin Homes as well. So they are modeling a loan growth of about 17% on a CAGR basis between FY22 to 25, with PAT growth in the same period being about 19% CAGR. So despite the vacant MD and CEO position, the business momentum has remained strong, is what Motilal is saying on Canfin Homes. Back to you.
All right, Abhishek, thanks a lot for that. And that has the stock excited up over 5% right now. Another stock that we are looking at today is Petronet LNG. This one is in focus as ICICI Securities has also written a note on, on the company after meeting with the management. Sonal, take us through the details here.
Well, yes, highlighting this note because not very often that we get to listen to the views coming in from Petronet LNG's management. The stock has been an underperformer so far, and ICICI Securities met the management where they said that yes, near-term volumes will remain stressed for the company because of the way global LNG prices have been moving. The company says volumes specifically with respect to third-party regasification, which were connected to spot LNG, and those prices shot through the roof. They were impacted this time. 12.5
2.25 metric tons or million tons based on long-term contracts, which is unaffected out of total capacity of 17.5 million tons for the company. Company has a recourse to impose take or pay penalties for their customers, but they are not going ahead with this because of the way macro conditions are, and that's why they will not do that. They are, however, looking at volume renegotiations with RasGas and aiming to secure at least 1 to 2 metric tons per annum of additional volumes as part of renewal here. They believe, this is the ICICI Securities analysts, they believe that utilization has bottomed out and recovery will be gradual for the company. So it will not be fast, but a gradual recovery is what they're expecting. And on the back of this, they have upgraded the stock to a hold from a reduce, also increased the target price to 210 versus 186 earlier.
All right, thanks a lot, Sonal, for that. Let's slip into a short break. On the other side, we have Satish Ramanathan, who's the CIO Equity at GM Financial Asset.
Welcome back. It's the start of the new year, and I just want to present something interesting that CLSA had spoken about. They're saying the big structural change that they are looking to see in 2023 will be, will India see more dedicated foreign flows? So basically, if you analyze the foreign flows into India, 95% of it is not dedicated into India. It comes in via the emerging market funds. It comes in via, those MSCI emerging market funds or global funds, etc. They're not specifically for India per se. 95% of them are non-India dedicated fund. And they're saying, can that number come down from 95%? Can we see an increase in the number of funds which are dedicated to India? And one of the reasons which they highlight is the depth of the Indian market is improving. The number of billion-dollar companies in India is the fourth highest in the world. It's behind only US, China and Japan. And these markets attract flows of their own. So as the depth of the Indian market continues to rise, and as more and more tech companies, these new age tech companies list, you will see more of these billion-dollar companies, more of the depth in the market increases, and perhaps India will be able to attract its own dedicated flows. So that is the structural change that CLSA will be watching out to see in 2023. But let's pose this question forward and the outlook for the next year with Satish Ramanathan, CIO Equity at GM Financial Asset Management. Satish, morning. Thanks so much for joining in. Rima here. Tell us, what is your outlook for 2023? What would be the key things that you would be tracking now?
Good morning, and thanks for having me on air. In 2023, we expect it to be a little more stock specific. In 2022, we had the base effect playing out for the entire market. There was a positive tailwind coming through. And what we expect in 2023 is that we have to delve deeper and pick out stocks that are likely to be winners. It's going to be a little more challenging for the fund management team. But I think 2023 is going to be all about that, where we see pockets of value, where we could hunt for growth with a reasonable value left on the table. That would be 2023.
Where do you see growth then? Because, this has been a very tricky year, right? I mean, a year when shorting IT and going long on banks was perhaps the best strategy. What do you see as the big strategy in 2023?
I think the banks will continue to have their earnings momentum. Credit growth is coming off a very low base and asset quality is good, and therefore provisioning costs are low. They would find tightness in the markets to raise money, but we think spreads could expand as well because the borrowers will have to pay more for borrowing money. That's going to be the central theme for the first half of this year, banking sector to do reasonably well. We also expect manufacturing and infrastructure stocks to perform reasonably well because the momentum is strong. We are seeing railway capex on a strong momentum, and we see that continuing. So it's just that we need to wait and watch if we can use volatility to fine-tune our entry point into these stocks. But the story remains the same.
All right. Hi, Mr. Ramanathan. Good morning. This is Pavitra. Even as this has been a tricky year, there definitely have been pockets which have stood out here, right? So you mentioned the banks, but something like defense has done well. You have some of the railway stocks which have done well. Do you find value in any of these?
In terms of value, I think the deep value that we saw in many of these stocks have gone. But can we just probably remain there and grow with the companies? Yes, that's definitely true. Markets are a little stretched in terms of valuations. So probably this bout of volatility that we saw and the nervousness that we saw due to COVID in China is something reflective of the nervousness in the market. And therefore, we think that we need to be a little cautious in terms of allocating lump sum, but SIPs should be the way to go in averaging your entry points.
Satish, I know you're bullish on financials, but so is the rest of the world as well, right? This is turning out to be a consensus overweight across retailers as well as investors. Do you think banks are likely to do well, but can they outperform? Because now everyone is expecting them to outperform, and once the narrative is firmly set in, the price action follows immediately, and we've seen banks outperform. So my simple question is, will banks outperform like the way they did, or do you think they will perform in line with the markets this year in 2023?
Good question, and we ask that ourselves quite often. But the issue is that the visibility of earnings in banking system is far clearer than rest of the market, because you hear narratives of slowdown in consumption, you hear narratives of electric vehicles eating into two-wheeler demand. So there's a lot of the structural bets that we used to take earlier. All of them are seeing some kind of volatility coming through in our base assumptions. In that context, financials, which is already 40% of earnings and far higher of incremental earnings growth, will continue to outperform till we find a new winner amongst the sectors that we are talking about.
Any sectors that you would keep away from, sectors that perhaps could be on the back foot this year?
Not really, but perhaps consumption could be something which had an early rally last year. It could be more into services rather than base consumption of FMCG and toiletries kind of a thing, because people are going out more often. So we would look at services and consumption-oriented services. That would be the likely winner going ahead.
Okay, got that. I just want to ask you about the mid-cap and small-cap part of the market as well. Of course, today it's doing very well, but in the past week we did see quite a correction after that huge run-up. How do you think this part is likely to fare?
So if we look at a one-year return, large caps are plus 5% or 6%, and small caps are minus 5%, and mid-cap in between. Now, structurally, we think mid-caps are the way to go because stock selection is possible there. We can also pick up long-term growth winners there. And if indeed India-dedicated funds, as you mentioned earlier, do come in, mid-caps would be the hunting ground. So we think mid-caps is the way to go. And as regards small caps, we think volatility would be linked to inflows from the retail market, because large fund houses and large foreign institutional investors don't play in that segment of the market as much as they do in large and mid cap. So in terms of small cap, we think volatility will continue and one needs to be cautious. The second thing that we need to also bear in mind is that the interest rates have gone up for the investor, and consequently that's something which means that the investor can allocate money into fixed deposits or other debt securities, which makes it a little less risk averse for investors to move their money there. So I think that's on a balance, that's the autocorrect mechanism that we have in the markets going today.
Okay, all right, we'll leave it at that. Thanks a lot for joining in and taking us through your views on the index and the way forward. Happy New Year to you in advance, and hope to speak to you very soon on CNBC-TV18. Well, the market has extended its gains now, almost 18,000 on the Nifty, a gain of about 200 odd points. So it is a pullback, and generally, these bear market pullbacks tend to get a bit sharp. So be a bit cautious on the upside. That was the view that our earlier technical expert gave us. This might just be a pullback from lower levels. Let's talk about the latest in the ICICI Bank Videocon loan case after taking former ICICI Bank CEO Chanda Kochar and her husband Deepak Kochar into custody. The CBI has now arrested Videocon group promoter Venugopal Dhoot as well. Santhya has more on that. Santhya, over to you.
So today, early morning, Venugopal Dhoot was also arrested by the CBI. The arrest took place in Mumbai. This is the third arrest in this high-profile case, which was actually filed by CBI in 2019, January 2019. And see, this case is going on since December 2017, technically, because that was for the first time that a preliminary inquiry was set up in the case by CBI. This was a result of whistleblowers' claims and media reporting following that. Now, talking about what happened last week, it was on Friday evening that CBI arrested Chanda Kochar and Deepak Kochar. Both of them were arrested from Delhi and were produced in Mumbai court. We are outside the court right now on Saturday. And on Saturday, Mumbai Special CBI Court granted 3 days custody of both Deepak Kochar and Chanda Kochar to the CBI. And today was the day when that custody is getting over. Today is the day when that custody is getting over. And both the Kochars will be produced in the court today. But what has happened, which was slightly actually out of, because that was, the CBI did not give any hint as far as this arrest was concerned. So CBI today morning arrested Venugopal Dhoot as well. See, interestingly, when on Saturday CBI was seeking the custody of both the Kochars, at that time, defense, while arguing its case, claimed that if CBI believes that there is a scam, let's say there was a scam according to CBI's case, why exactly the beneficiary in this case, that is Venugopal Dhoot, was not arrested and the Kochars were arrested. To that, at that time, public prosecutor representing the investigating agency told the court that Venugopal Dhoot was cooperating with the agency. That's why the need to arrest. There was no need to arrest him. But we are talking here, we are on Monday, and now CBI has made the third arrest in the case. Venugopal Dhoot of Videocon group of companies is also arrested. The allegations are same, criminal conspiracy, cheating. In fact, in the last hearing that was on Saturday, CBI also informed the court that they are planning to invoke, they want to invoke IPC 409, that is criminal breach of trust. The application is also moved. It will be cleared whether this section will also will be added or not. But as of now, total 3 people arrested in this high-profile case.
Okay, Sandhya, thank you very much for that. You know what we're also picking up from sources, and as is getting flashed on the screen, you indicated earlier that why Venugopal Dhoot was not arrested at the same time as Kochars, and that's because he was cooperating. So after a gap of 3 days, Venugopal Dhoot has been arrested, but what we're learning from sources is that he has offered to turn into an approver, so versus being an accused. Right, so that changes the entire game, and perhaps it will be easier now, maybe, for the CBI to place the blame, perhaps, in the Kochar. So if we have Sandhya with us, Sandhya, do you want to comment on what we're picking up? What Parikshit has learned from sources that Venugopal Dhoot has offered to turn an approver in this case versus an accused earlier.
So we spoke to some sources in the agency, and we were told that Venugopal Dhoot at the time of the arrest offered that he's ready to become an approver. So let me explain this whole procedure to you. First of all, at this stage, at this early in this in any case, a person, an accused, offers to become an approver, so that the person can expect some leniency from the investigating agency during the time of custodial interrogation. And the agency benefits in terms of getting a right direction or nudge in the right direction in terms of investigating the case. Now, if we talk about the legal procedure, this process of an accused turning into an approver does not happen at this stage. It happens only once the charge sheet is filed and the framing of charges is done. After that, the agency has to move an application and inform the court that an accused is willing to turn an approver, and that particular accused can help the agency in terms of any further investigation if required, or to prove its case during the trial stage. And only if the court gets convinced that that accused can contribute to the trial in a positive manner, then only the court grants this permission of that to the accused to become an approver. So that's going to happen at a later stage. But what we have learned from our sources that Venugopal Dhoot has offered to become an approver in the case.
Okay, thanks a lot, Sandhya, for that. Let's do one thing. Let's take a quick commercial break. We'll get you more on the markets on the other side. Stay tuned.